Hello and welcome back to Ask Adam with Rob, a guide to understanding the mortgage process. I'm your host, Rob King, Realtor at Keller Williams City Views in beautiful Fort Lee, New Jersey. And we have Adam Roberts, a mortgage banker from Atlantic Home Loans with over 20 years experience working with both clients and specializing with agents. So first, Adam, thank you so much for helping me out on our first remote edition of Ask Adam with Rob.
Oh, thanks, Rob. I appreciate it. I had a million other places to be outside today, but I chose you.
I can imagine, and I appreciate that.
Must feel special, right?
I do have my I Heart New York coffee mug just to show some solidarity on what's happening on the other side of the Hudson right now. So first, are you and your family healthy right now? Staying sane?
Thank God. And you?
Yeah, same here. We've been in self-isolation now for almost 12 days. So we're trying to keep our sanity right now.
Well, try. I think it's been close to about 30 for me. I was in quarantine with the 2 weeks of the refi boom, and I couldn't move. So I've actually felt like I haven't been out in about 30 days.
Yeah. Well, I think that's a great transition into exactly what we're talking about today. So I know recently we've had, we're going to be talking today, just for everyone to know, about how clients can take advantage of the next dip in mortgage rates. Because I know recently we had historic lows and they stayed there for about 2 weeks. And I can imagine you and everyone else in the mortgage industry were just hammered with clients and people reaching out to you. So first, did everyone that reached out to you, did they get the opportunity to refinance? And if not, what happened and why weren't they able to?
Well, Rob, it's a great question, and I'll try to answer it from a standpoint of me as a loan officer and me as a different loan officer. I think what happened is unprecedented. Imagine 20 years worth of clients across the board for many loan officers, and when they have a few different prospects, maybe someone was at 4% or 4.25%, and they were to get 3.5%. There were a few people out there refinancing, and we were busy. But when the rate dipped below 3%, every single client you could ever imagine pretty much was inquiring. And if you ask any loan officer, it was virtually impossible to get back. There was just too much demand. And unfortunately, what wound up happening is you really couldn't service the clients as well as you wanted to by educating them and answering their questions. So I found after a couple of days and realizing really what was going on and how it was just going to be a small opportunity, my patience got a little less and really didn't have time to really discuss much more than, here's the rate, do you want to do it? Yes or no, because we knew it was going to end. So I think what wound up happening is the people who weren't prepared, didn't really know the benefits of refinancing, asked way too many questions, really wound up missing it. And the clients that trusted their loan officer that they dealt with in the past, they just took their phone call, they told them to do what they needed to do, and they did it. They really got rewarded, and they got rewarded in a huge, unbelievable way.
Yeah.
Actually, one realtor from your office acted quickly.
Yeah. Well, first, I know how busy you are, and I do want to say thank you. I know you talked to a few of my clients who were at the beginning stages of looking at getting loans. I do appreciate you taking a little bit of time, especially when you were so busy.
Oh, no problem.
So I think that's also just highlights the importance of building those relationships so that when certain events happen, we can take advantage of those.
Yeah, I learned a lot from those last 2 weeks, especially just even how to move on from this in the future, right? Because I think this whole thing is going to change the way people do business, and it's going to be interesting to see.
Yeah. I also see that you learned how to grow a beard too.
I'm trying.
So you were saying that the individuals that were able to take advantage of that dip, they were prepared for when it's happening. So how can clients moving forward, when the next dip comes along, how can they be prepared to take advantage of it?
Well, it's funny, it's a question. I would say the mortgage person needs to be prepared first, right? And when I say that, probably about a year ago, our company introduced a new software that a lot of the old timers in the business were kind of resistant to.
Mm-hmm.
A lot of technology and the ability to do a lot of things. And I think, just nature, human nature is not to want to learn things different.
Mm-hmm.
However, I think, through some force and some guidance, the loan officers really took advantage of it. I especially can tell you that it 1000% changed my business, because it gave me the ability to allow the client to put in the work that needed to be done in order to get things done for them.
Mm-hmm.
So number one, I think as a loan officer, you have to be with a company that has the technology to handle the influx of business. And as a client, you want to be able to be offered, right, that technology so that you can get your things in easily. So as far as being prepared, I would say, really it's about applying, right? So actually, it's one thing to call up the loan office and say, hey, what's your rate? Well, my rate's 2%. I want it. Well, that's great. I can't lock you in. I don't have anything, right?
Mm-hmm.
I don't have any information. I don't have any of your documents. And they'll tell you, well, I'll do when I get home. But when you get home, it's no longer 2%. It's 2.5% the next day, right? So really the key is that if the clients are, with my company, for instance, what I'm doing now is that I'm sending the clients the application.
Mm-hmm.
The application allows them to upload all of their documents and then submit. It does not mean that I need to run their credit right now. It does not mean that I need to do anything. However, when that rate does drop, okay, what I've decided to do is prioritize my refinances by the people who actually put in the work, right?
Mm-hmm.
So when the rate does reach 2.875, it's going to be very simple. I'm going to go in my system and I'm going to look to see who applied for the mortgage already. And within 5 minutes, I can have them locked and, over the phone, and I can say, hey, your rate is 2.875. Do you want it? The answer is yes. I can do those all day. They're making it easy. But when there's too much to handle, you have to have a system.
Yeah.
And I think every loan officer is going to have a system.
Yeah.
So if you want to have that, you need to have a system.
Yeah. So it sounds like the next time when there's this dip, you're going to be very proactive with your clients to making sure that they get locked into those, as long as they submitted the documentations beforehand.
Right. A lot of my days are just, thinking about which clients would be right for this next boom. So I'm reaching out to them now while we're stuck inside, saying, hey, it's coming. It may be coming. You're home now. The application will take you about 15 to 20 minutes to put yourself in contention to save your family a ton of money in the future. I think it's worth it. And if someone gave me the opportunity to do that with no cost to them, why wouldn't you do that, right?
Yeah, absolutely.
The early bird will get the worm this time.
Yeah, no, I 100% agree with that. So you were saying that they would have to submit some documentations to you. What documents would they have to submit with you along with the application?
So typically for mortgages, you want to have a copy of your photo ID. You want to have a mortgage statement. You want to have your last 2 W-2s and tax returns, last 2 pay stubs. And if you're banking with one of the big banking institutions, we can actually pull your bank statement straight from your lender through our system. So you don't even need your bank statements. We can pull right through the system.
Oh, nice. That sounds quick.
I would say that's the bulk of it. Pretty simple. By you doing that, it puts you, in a situation where you're getting 4% and you're now getting 2.875.
Yeah, that makes a lot of sense. And it wouldn't take that long for a client to get all those documents either.
Most of the clients have them at their fingertips.
Yeah, exactly.
It's just a matter of having time and being home, which I think we all have some of that now, right?
Plenty of time right now. So just let's say if somebody's locked in at a 4% mortgage rate, and then they refinance and they get locked into a 3% mortgage rate. That 1% dip, how is that going to affect their lives?
Well, I think, people always ask me, Adam, does it make sense to refinance? And it's a very, very difficult question to answer without knowing the facts. So obviously my answer is never just to answer them, right?
Yeah.
My first question is typically depends, right? Depends on how long you're going to stay. My first question is, how long do you plan on being in the home, right? If the client says that they're moving within a year or 2 years or maybe even 3, it's typically that I'm saying absolutely not, it doesn't make sense, and it's probably a waste of time, right? However, after that question, there are a few factors, right? So we all know if somebody, let's do an example. If somebody took a mortgage out, a 30-year mortgage 10 years ago, they have 20 years left.
Yeah.
Okay? They may be going from 4 to 3, but they are starting back at 30 years again. Okay? What's going to happen is they're going to save money on a monthly basis. It's the key to that, of what they do with that money, is really the key of whether I tell a client it makes sense or not. So in that same scenario, 20 years from now, if they stayed with the old mortgage that they had and they looked at their balance, it's probably going to be lower, right, than the mortgage that I'm going to be giving them, okay? But you can't discount the fact that for the last 20 years, the client paid $200 less, right? The question is, what did they do with that $200? If they invested it or put it in good places, of course this makes sense. You're going from 4 to 3, right? But if you're just going to use that savings as a, I'm going to blow it on nothing, then I don't know. It depends what your goal is, right?
Yeah.
So I think it really depends on the person. For the most part, I don't think it takes a genius to say, hey, does it make sense to go from 4 to 3? Yeah. Overall, right? But I at least want to always try to talk to the clients about, if they're going to do this, then what should they do with it, right? It's not just for savings, right? But as you know, Rob, in this market, in any market, people need money now, right? They need the $200 savings. They may not care as much if they owe $10,000 more on a house that went up $500,000 in equity over the last 20 years, right? It may not be of any interest to them. And most people care about the monthly number. So I kind of go with that.
So do you usually try to have those conversations with your clients to make sure that they're making good financial decisions?
I do. I one of the questions I say, why do you want to refinance? And it's funny, the answers that I get, well, I want a low rate. I'm like, yeah, I get that. But are there any other reasons, right? Because I feel it's part of my job to dig, okay? Clients come to me, it's maybe one loan they've done in their lives, maybe two, maybe Uncle Sal or Aunt Betty told them something in the future or in the past. It's not enough, right? It's my job as a loan officer to make sure that, I'm asking the right questions and I'm putting the right things in their head, because it is about their families and it is about their lives. And what I've noticed over the course of 20 years, Rob, the business only grows when you give good to the people. When you do right by them, they keep coming back. When you give sound advice, they keep coming back. When you give advice because you just want to close a refinance that doesn't make sense, it doesn't work. Okay? Anyone who's been in business long enough knows reputation means everything.
Exactly.
And it's times like this, Rob, with everything that's going around, that, reputation of who you deal with does matter. I'm sure, you're used to hearing when you refer people, what's their rate, what's their fees, what's their this, what's their that. And all that stuff is important. But I will tell you, it's pretty standard across the board, everybody's fee. And in today's market, I think it's most important that you're really dealing with someone who you trust and you know is going to be able to get you through hurdles, because hurdles we have in front of us. Let's face it.
Yeah. So then real quick, so when somebody does refinance, you're saying the cost is pretty standard upon who you're dealing with. Can you talk a little bit about what that would cost?
Sure.
And then would they be able to take that cost and roll it into the new loan?
Sure. I'm going to give you the average, right? And I'm in the state of New Jersey. Obviously, you want to make that clear, right?
Yeah.
But if you're dealing with any typical bank or a mortgage company, every lender has a bank fee. You're typically looking in the range of $1,000 to $1,300. Our company fee is $1,095. Okay. And then you have the
lower end of that.
Correct. That you definitely roll into the mortgage. Okay. You also have the title insurance, title search, and settlement agent. And when you typically add all that up between the bank fee, the settlement agent, and the title, I usually just give a roundabout number of around $4,000.
Okay.
That $4,000 will get wrapped up into the mortgage. And you also have an appraisal that you pay up front, right? That you cannot roll into the mortgage because it needs to be paid for, right?
Yeah.
Up front. But so I'd say the average cost is around $4,000. Now, this obviously depends on the loan size, right? It's very vague in what we're saying. If it's a bigger loan, obviously up it a little bit. But you also have to include on a refinance the escrows and the interest that's due. Okay.
Mm-hmm.
So, Rob, a lot of times people call me and say, Adam, I'm doing a refi with you. I got your paperwork. My loan went from $300,000 to $310,000. You said the cost are $4,000. How do you get to $310,000? Well, what we're doing in there is we are rolling in the $4,000, but you're also going to be skipping a month in mortgage payment after you close, and you're going to be receiving your escrows back from your old lender. But that does need to be paid in the new loan, right?
Mm-hmm.
So most people choose just to roll it in and then use the money that they're getting back as a buffer and a cushion and reserve in their bank when they return it. Okay, but really it's about $4,000, let's call it, is your closing cost. And a very simple way just to say, hey, is it worth recouping my numbers? And going back to why we talked about, does it make sense, right? Is if you're saving $200 a month, and you're going to be there for 1 year, you save $2,400, but you spend $4,000. It didn't make sense to refi.
Yeah.
However, we do those same numbers if the person who's going to be there for 10 years at $200 a month times 12 is $2,400 times 10 years. You're probably talking $26,000, right? Minus the $4,000, so they save $22,000. Yeah, that one made more sense, right?
Okay.
So that hopefully explains the closing costs a little bit.
Yeah, it definitely sounds like something that people should be reaching out to their mortgage specialist to make sure that they're having these conversations. So right now, I know everyone has an abundance of, well, I shouldn't say everyone, but a lot of people have an abundance of time in their hands with the uncertainty in the world right now. So what should people be doing right now moving forward?
Well, hopefully they should be staying indoors.
Yeah.
Otherwise noted, right? We don't want to see anyone on the streets. But if I was looking for a house, and we'll just kind of skip over the refinancing for now. But if I was looking for a house, I'd be spending this time doing my research on who I want to deal with. I think a lot of people get caught up in the mortgage world and the real estate world with, what's your rate, what's your fee, they're all got to be close to the same, or none of us would be working at the companies that we're working. Right? Yeah. It just doesn't make sense for one guy to work at a company when he has terrible rates and someone else. There's always some sort of catch, right? So at the end of the day, I think the most important thing is to really figure out what's important to you as a client. Is that personal touch and that service, does it matter? Does it matter, to be able to get a hold of someone at 9 p.m.? Does it matter to you as a client? I think, over the next couple months while we're here, and you're getting your pre-approvals, and maybe you've talked to 2 people, maybe test them out a little bit. Maybe make that text at 8 o'clock and see who responds, right? Maybe do a video conference and see who actually has some peace and quiet in the house, right? So that when you're doing your business, you're not interrupted. This coronavirus is going to change, I think, the way we all do business. And I think right now it's about finding the people who are resilient, who are positive, who are winners, and who are going to get you to the finish line. And, I think this is going to shake out a lot of people, right?
Yeah.
There's a lot of agents who are going to maybe do something else, right? There's a lot of mortgage guys that might do something else. There's attorneys that may not be able to stay, right? We all need to do what we do, but I think the key is in the research. Best way, ask your agent. Your agent has the best means for you, and most likely, right? They have the same goal. They want to get you to the finish line. Realtors are not sending their clients to mortgage people because they're getting something. They're getting the deal closed. So when your realtor gives you a referral, you don't have to use it, but you should pretty much be trusting that that's a good referral. Otherwise, you're probably using the wrong realtor, as we discussed before.
Yeah. So, it sounds like you're talking a lot about, right now, it's determining who you want to build these relationships with, so that when you work, a few months from now, when you have to be making some deals, you're working with a team that you really trust.
Rob, I think the same thing with you. Aren't you learning a lot about people and who's prepared and who's not prepared?
Absolutely.
And who cares about other people and who's ignoring, what's going on TV and hanging out at the beach, right? In these times, we learn a lot about each other. And I think if you're asking me, hey, Adam, what I'd be doing, I'd be using your time to figure out who's who the best you can. That's all you have is time right now.
Exactly.
Of course, if any of your friends and family need anything, hopefully, you'll give them my number and I'll be able to help them as well.
Of course. I have a lot of trust with you, and I've
Thank you,
sent
Rob. I
many
appreciate
clients
it.
your ways in the past as well. And I will say you always take great care of everyone that I send you.
I appreciate that, Rob. Believe me, it's a true compliment. Thank you.
Well, you're welcome. You're welcome. Well, everyone, I hope this video was very informative. If you have any questions, please feel very comfortable reaching out to us. Adam and myself will be very happy to answer those questions. And we hope everyone stays safe, healthy, and sane, I guess.
Amen to that, my friend. Thank you so much.
Yeah. Thanks so much. We'll talk soon, Adam. I know we'll be doing some more of these in the future. Hi everyone, it's Rob again. If you enjoyed this video, please give us a big thumbs up and subscribe to our channel. And as always, happy investing.